Our next session is going to be about financial technology of Fintech. The session is development of Fintech to ASEAN financial industry. Our panelists are Kun Polapat Arkkrapridi, Managing Director, Corporate Venture Capital for Digital Ventures, a subsidiary of Siam Commercial Bank. Second, Kun Tanyapong Thamavaranukupt, President of Ascent Money Company Limited, a financial technology firm with a presence in 6 Asian countries, namely Thailand, Cambodia, Myanmar, Vietnam, Indonesia, and Philippines. And the moderator of this session is Kun Nattanuch Arnantapunpong, Senior Associate at Expara. Ladies and gentlemen, may I now invite our panelists and the moderator on stage, please. Please welcome.
Hello. Okay. Good morning. Before we go to the delight lunch outside, we have the main course here. So for the topic of development of fintech to the Asian financial industry, something a little bit closer to home and something a little bit closer to you, I hope. I will give like 10 minutes at the end for the question from the crowd here. Please prepare a lot of questions, or I will let panelists ask you. So starting with Mr. Polapat Arkkrapridi, Managing Director of Corporate Venture Capital, Digital Ventures. Could you introduce yourself a little bit about what DV is doing?
Sure. So I more commonly go by the name Paul Ark. Since you listened to a Paul in the e-commerce session, you can refer to me as Paul 2.0. If you haven't guessed, I am an American-born Thai. And I work with Digital Ventures, which is the fintech arm of Siam Commercial Bank. I imagine most of the people in the room are familiar with SCB, so I won't go into too much detail about our parent company. But Digital Ventures is a wholly owned subsidiary of SCB. We are tasked with helping SCB navigate this brave new world of fintech and technology. You're going to hear the words disruption a lot. And we do that in a number of ways. One is we have a product team that spends time launching new products, testing new technologies, either technologies that we can bring back into the bank or technologies that we can use to create products and services outside of the bank to disrupt our own bank. Another area is through our startup Accelerator. We accelerate local startups or international startups that are focusing on the Thai market. We're not specifically looking at fintech startups to help accelerate and support, but any startup that serves the Thai market. And actually, we do find ways of connecting those startups back to the bank in any case. And then the final piece of Digital Ventures is the venture capital arm, which I manage. So I manage $50 million in corporate VC funds. This is right off the bank's balance sheet, so SCB is our only shareholder. And I want to say it's a fintech fund, but we actually do look at a lot of enabling technologies that feed into fintech. So we will look at things like AI, we will look at things like biometrics, cybersecurity, even future tech like virtual reality, anything that we think can ultimately impact the future of our business. And we are not limited geographically, so the great majority of our investments are outside of Thailand. We've placed money in Hong Kong and Singapore, in San Francisco and New York. I'm currently working on deals in London, the Nordics, Israel. We will go anywhere in the world where we can find technologies that will ultimately impact financial services. Just as sort of a quick background, I come from your side of the table. I spent 10 years as an investment banker. I actually did spend a short amount of time as a commercial banker. I was a management trainee at SCB back in '94. And I also spent 10 years as a retailer. So I spent a number of years working with Central Retail Corporation, Central Group, working on regional acquisitions, as well as helping Central get into China before I transitioned over and started opening up a bunch of Apple stores across the region. So it was kind of an interesting journey from investment banking to opening retail stores to managing a fintech VC fund.
Okay, thank you. So we have another panelist here, Mr. Tanyapong Thamavaranukupt, President of Ascent Money. Can you introduce a little bit about Ascent and Ascent Money?
I'm Tanyapong. I think a lot of people may not know Ascent Money, and I think Ascent Money is the company name that we use to operate the business. The brand that we use when we go to the market, we operate it under the brand of True Money. I'll give you an introduction. Ascent Money is, we are currently the fintech company that cover 6 countries in the region. We have parents, father and mother of CP Group, and Alipay and Financial. And currently we are operating in Thailand, Myanmar, Cambodia, Vietnam, Philippines, and Indonesia. Our mission is to enable everyone access to innovative financial services leading to better life. We have looked around in the region, and we have found that even basic financial services is not widely accessible by people in the country. We see that both an opportunity and also a mission that we want to help these people getting to the financial services. So we have 2 key groups of customers. One is digital consumer, people who are slightly younger, who are very familiar with tech, familiar with mobile phone, tech savvy. And then we have another group of people who are underbanked and unbanked population. We are focusing on, at the moment, we are focusing on the payment business, both online, offline. In the future, we are also looking at other financial services that we can offer to our customers. We have 2 lines of business. One is the mobile wallet app. I think for many of you in Thailand, you probably have seen some advertising, or some of you probably already are using the True Money wallet. The True Money wallet is now in Thailand. We have this wallet apps that we start off roughly about 3 years ago. Then in international, in the rest of the 5 countries that we are operating, we start off with an agent business. And the agent is looking exactly like what you are seeing in the pictures. So we are turning mom and pop shop in different countries to be our True Money agents. Some of the stats that we have, the True Money wallet in Thailand at the moment, we have roughly about 6 million download customers and about 3 million active customers that are using our wallet. For international, I think one of the things that if you look at the mission, what we are trying to do is to enable everyone access to innovative financial services. That's simply because there's a large pain point in the region today. As a region, we have 620 million people. Many of these countries have very young population. 70% of them are under 40 years old. Majority of them are actually unbanked. In most countries, 5 countries that we are operating, ranging from 40 to 70% of the people don't have bank account, or even if they have bank account, they don't use it. And also we are seeing growth in smartphone penetration in all countries that we are operating in. If you look at, if you compare all the 5 countries, even country who we might think is slightly less developed than others, like Cambodia or Myanmar, the penetration or the growth of smartphone is actually quite fast, quite rapid, and we are seeing more people are on Facebook, more people are on chat apps. That has been their common lifestyle. For international, in Indonesia, we are operating roughly about 25,000 agents in Indonesia. And the rest of the 4 countries, we have roughly about 5,000 to 6,000 agents. We are currently providing basic payment services to customers in these countries. And we have 3 basic services. One is mobile top-up, second is bill payment, and third is remittance. And for many of us here in Thailand, when you look at the service that we are providing, it seems so basic. But if you look at many countries that we are operating in, it's a large pain point for them. I'll give you an example on the bill payment. Here it's so easy to do bill payment. You can do it via mobile banking. You can do it via wallet. You can go to 7-Eleven to make bill payment. Many of us use auto debit, deduct the monthly bill every month. But if you go to these countries, they have this local electricity company. So people have to queue up roughly about half an hour to 3 hours just to pay their monthly bill. So even basic financial services is not available. Remittance, for example, many of them, when they want to transfer the money, when you want to send the money back home to their parents, they have to give it to their friends. Sometimes they give it to bus driver, and you know very well for example Myanmar workers who come and work in Thailand, they use the word called poi kuan, or in English is hundi. They use this informal network in order to send the money back. So for this group of customer, I think banking is very far from that sort of normal lifestyle. So for us, I think we think the agent network is a bridging gap in order to convert the customer into fully digital. I think customer need to be familiar with basic formal services before we can ask this customer to go fully digital. So and we are also looking at, and I mentioned earlier, we are looking at 3 basic services today, which is mobile top-up, bill payment, and domestic remittance. But we are expanding into other type of payment services like ticketing, like international remittance, like insurance. I think some of the things that we are going to launch very soon is the ticketing. Some of the information that we have, for example, in most countries, including Thailand, the basic transportation of people is actually bus. When you want to do inter-region transportation, train is generally not available, so generally bus. Airport is not well developed, so people generally travel by bus. But they have a big pain point where they have to go to bus station, which could be 2 hours from their house, make a payment, get the bus ticket, and then come back home and wait for the traveling date. And for us, because we have agent network who are everywhere in the country, customer can come to our agent network, make a bus booking. They can choose the seat, they can choose the route, they can get the ticket, and they just wait for the day that they travel, and they can bring the ticket with them. So we are looking at providing these services to our customers in these countries. So that's the overview of the asset money service that we are doing today.
Okay, I think a lot of people here were using a lot of asset money products already with know or not knowing. But I would like to talk about Paul. Last year, you have been flying around the world. Just last year, I don't know where have you been, but I saw you at the Singularity University in Silicon Valley. Like, have you been there like 100 times already? Do you have anything to update us about the latest trend of the fintech?
Oh, the latest trends. That's an easy answer. It's fintech is a rather unusual beast in the sense that, I think if you were to ask me a year ago, I think a lot of us in the fintech space would have said, 2015, 2016 was the peak. VC funding for fintechs was through the roof. Everyone was talking about crowdfunding, then everyone was talking about blockchain. Now everyone's talking about AI and insurtech. And I think the expectation was that in 17 things would have come down a little bit. There's still a lot of legs to fintech, but I think the expectation was that VC funding into fintech would slow down. What's interesting is that, it has slowed down, but not because interest in fintech has slowed down. I think probably the thing that's on everyone's mind at every fintech conference I go to is the rise of cryptocurrencies and the proliferation of initial coin offerings, or ICOs, otherwise known as token sales. This is a form of funding that is extremely frontier. It's been around for about 4 years, but just in the last 9 to 12 months, ICO funding has gone through the roof. And just to give you a little bit of an idea of the scale of this, year to date, so over the last 9 months, global VC funding for early stage internet companies, for all types of tech companies. I want to say, I don't have exact numbers because it changes every month, but we're talking roughly about $700, $800 million in global VC funding for early stage internet companies. In that same period, ICOs have raised about $1.6 billion. So the amount of funding that is going to fintech companies through a fundraising means that is completely bypassing VC is just astounding. And so if you ask anyone in the VC space that companies are going to be able to raise hundreds of millions of dollars in hours using the blockchain, they would have said, okay, that's a really nice fantasy. We'll see that happen in 2020, 2022. This is happening now. So this is not about, oh, okay, one day people will raise money through the blockchain. It's happening now. The technology is validated. People are willing to invest in money in sometimes ludicrous business plans. I'll tell you, Floyd Mayweather raised 2 ICOs in his fight leading up to Conor McGregor. I just read the news today that Burger King Russia just issued their own cryptocurrency. So if you want to talk about stuff that's just absolutely ludicrous, you're seeing it. But if you get past all the hype, once there's a crash, once things start to settle down, once regulators start to step in, you cannot escape the fact that people are willing to throw vast sums of money at companies using the blockchain. And I think that is a really interesting trend that not only threatens to disrupt the venture capital industry, but over the next decade, potentially disrupt any capital market that involves fundraising over an antiquated process of book building, phone calls, paper prospectuses. Again, I exaggerate when I say you're raising money in a few hours. It does take some time to set up an ICO, but the minute you press the button, people are raising hundreds of millions of dollars literally within hours, sometimes within minutes. And it is quite an astounding process to see.
Okay, thank you for the heads up that will be out of job soon. I think because you have seen a lot of fintechs in this world already, I would like for you to compare it with Thailand or with the Southeast Asian market, that how far we are in the development and how far behind from the Western world.
Oh, me, okay. Okay, so I would say, I think Thailand is at an extremely early stage, and this is simply a function of the age of our startup ecosystem. Our startup ecosystem is about 5 years old. So that is less time than the length of most VC funds that invest in capital, which means that if you have a very, very new startup ecosystem, you have a lot of first-time founders. You don't have a large pool of serial entrepreneurs. That will come after this first wave of founders fail in their business, and make no mistake, in the startup world, we're talking 95% failure rates. But what I hope to see, what we all hope to see, is that these founders fall off their horse, they get back on again. And once they become that second-time entrepreneur, we've got a pool of serial entrepreneurs. And what we need is we need an ecosystem that gets to the point where you have a pool of serial entrepreneurs, people that are coming out of established companies. So, when I look at the fintech space here in Thailand, I see a lot of young 20-somethings and 30-somethings who have some experience, who are willing to take the big leap into entrepreneurship, and they're starting fintech companies. And some of them are quite interesting, but what we really need is, to get to that next stage of fintech evolution, is we need people coming out of commercial banks, investment banks, insurance companies that have 15, 20 years of experience. They know their business inside and out. They know all the pain points of their companies. And they're deciding, I've got 15, 20 years of experience, I know my business, I want to be my own boss, and the ecosystem is mature enough for me to step out of that corporate business and get funding and resources to launch my own startup. When we get there, then we're going to start to see the fintech space in Thailand sort of take that next generation leap that will get us caught up to places like North America or Europe, where fintech entrepreneurs have been coming out of established financial institutions for the past 2 decades. So, that is a very polite way of saying we're very far behind, but that's because our ecosystem is very young. And so a lot of it is just a function of age.
Yeah.
I just like to add, I agree with Paul. I think
this is a good example right here of someone with deep domain experience coming out into the fintech space.
Somebody who quit banking job.
Yeah. So fintechs, there are many areas in fintechs, and in most areas, I would say we are still very far behind other countries, especially in the West. But there are some areas that I think Thailand and Southeast Asia is actually at the forefront of the fintech world, which is the payment. The payment world is actually just starting. Apart from China, which is way ahead of everybody else. China is 5 to 10 years ahead of everyone else. Southeast Asia is now the battleground of the payment business. There are many players who come in and want to win this space. Last week we saw K-Bank, SCB, and other banks, launching a new mobile banking apps, focusing on the lifestyle payment, and that's not uncommon. We have seen this in every countries that we are operating in. Payment space are becoming hyper competition in a sense in many countries that we are operating in. And I think everyone is looking to refrog the period where many countries have to take 30 years, 40 years to convert from cash to digital. I think Southeast Asia, I think we're going to see that conversion much faster, given the interest of fintech investor and many corporate companies who jump into this space. You look at Indonesia, for example. There's a big hail riding company similar to Uber and Grab. It's called Gojek. Gojek, for example, is very aggressive and want to get into payment. Grab, for example, want to get into payment. You have people like Alipay and WeChat who are investing heavily in the region on the payment side of the business. So I think we are seeing that space that many investors, many startups, many corporates are interested to go in, and the interest come from various sides. In the ecosystem, you have banks now who want to jump into the payment. Then you have credit card company as well. You have telco. You have sort of established fintech people like Grab, Gojek. Then you have people from telco. So many parties who are looking at this and want to jump in and invest in this.
Okay, so I agree with Paul that the ecosystem is very young. Like last year, I helped Kun Konjatigawanit set up a Thai Fintech Association just last year, and it we just have heard of the fintech just last year, and a lot of people are working from, but they work at banks before and they quit the job. I'm one of them. Last year that I quit. I'm also worked at Patra and SCB before, and I think more and more of the professional and experienced veterans from the banking side are starting to see the new opportunity. And as Kun Tanyapong is from KTB too, right? So I would like to know why who do you think will be the disruptor for fintech? Is it gonna be the bank? Is it gonna be telco? Is it gonna be other people? Or asset money is gonna be leading Thai fintech here? Maybe we'll start with Tanyapong.
I think it's actually there's two sides of the coin, right? When people look at fintech, they feel, hey, it could be a major disruption to incumbent, and generally we are referring to bank or financial institution, and financial institution could be broker, could be insurance companies. Of course, I mean that's that angle, but there's also other angles where fintech actually help support the incumbent. So when people look at fintech, it has to look at both sides of the coins. I'll start with the second, which is the how fintech actually help incumbents. You look at payment, for example, right? In Thailand and in Southeast Asia, cash is king. Cash is roughly representing in Thailand probably 75 to 80%. In other countries, Southeast Asia, cash probably 90%, 95%. So if you have fintech startup, people who are focusing on driving payment from cash to digital, right? That's help banks, because eventually this group of people they can start doing the banking transaction, which otherwise they wouldn't be able to do. For merchants in the market, if they start accepting wallet or start accepting mobile payment, they have information on the income, how much do they sell per month, how much do they buy per month. With that information, financial institution can use that information to do the lending, right? Which otherwise wouldn't be available, right? And you have seen that in every country. In Thailand, there's still I think close to 3 million SME customer in Thailand. I think the biggest part of SME in the banks probably close to 500,000 customers. So that's still a big underserved customers. So without fintech, I don't think that is going. It's going to take a long time, or it's not going to be possible. So in that sense, I think that help. The fintech actually help the incumbent. There's also other areas. If you look at other areas, some of the insurtech things that could help insurance company operate their business in a much leaner, faster, and cheaper. For example, there's a technology for insurance company. In the past, when you want to do a claim for your car, what you have to do is you have to call the insurance company and said, okay, send the claim person to your office or to your house, looking at the damage. So the guy look at the damage, take a picture, key in the damage, send that document back to the head office, do the claim calculation, and then as a customer, then you can go to the garage to fix your car. With the technology, with the fintech technology, now there are some companies who can let the customer take the picture of that damage themselves, and through the technology of AI, the picture that the customer taken, the quality as good as the claim person who take it. For example, there's a glare, right? There's a sun coming to your car, and there's a glare, like saton. With that, it's very difficult for a claim for the insurance company to look at that damage because there's a glare. But the technology can reduce that glare. For customers who take a picture from a different angle instead of direct angle, that picture is low quality. But the technology, it can actually shift the angle to become the direct angle. So there's a company in China now who can do the claim in 3 minutes instead of 3 days. And that saves the insurance company significantly and in the claim process. So there's a lot of benefit also that the incumbent can work with and can enjoy from the fintech. On the disruption side, I think there are some areas that, for example, payment. There are some areas that we may compete with banks. But again, even for payment services today, if you look at the payment, majority is cash. When you look at money transfer, a lot of it is under the table, underground. That's not the transaction that banks or finance company are capturing anyway. So there will be some disruption, but again, we have to look at areas by areas, and again, whether the cost and benefit, which one outweigh which one.
I don't know if you play it down a little bit or want the banks to overlook fintech's company, but from what I see from your presentation previously, a lot of things are bank service, like insurance is pot goal for the banks, and you're doing personal loan. As the investment arm of the bank, Paul, how bank can move forward with the fintech, and how bank could try to prepare for this new disruptor?
Okay, probably before I answer that, it's probably best to address the way I view disruption, because I think, when people talk about fintech disruption, they're always talking about disrupting a bank as an institution, which I don't think is the right way of looking at it, because, if we start with a great quote, Bill Gates once said that, people need banking, but they don't necessarily need banks. So when we think about disruption and we think about banks, banks are not black box monolithic organizations. Banks are collections of products, services, and processes. So when you say a company is disrupting, they're not disrupting the bank. They're not looking to replace the bank. Most fintechs are basically zeroing in on a particular product, service, or process and say, I want to completely upend, this service. I want to upend the way the bank processes this data or this product. So, so in the fintech space, we see, this trend which is towards unbundling. It's basically saying, how can we unbundle each individual product and service and find a way to do it better through digital means, through technology means. Which means that I personally don't think that banks as institutions are going anywhere, but how they look 10 years from now is going to be radically different because their bundling, their collection of products, services, and processes are all going to be very different because of financial technology. So, so when we talk about disruption, we look at, okay, which one of these areas, which products, which service, which process is under attack. And to be honest, I shouldn't even say under attack because we think of disruption as this is bad for banks. Because when we sit there and say disruption, we think, oh, banks are going to lose revenue because of this fintech. But the thing to understand with technology is that technology drives down revenues because costs are also falling. So the trick is, can you disrupt something where you disrupt the cost faster than you disrupt the revenue? Because there is no businessman in their right mind that wants to get into the business where revenues go to zero and costs are still high. That's not good for the bank, and that's not good for the fintech entrepreneur. They get into that business because they think, I can slash revenues by 90%, but I can slash costs by 99%. And I can get 10x increase in margin. So, when we look at, for example, SCB was the first bank in Thailand to introduce a commercial service on blockchain, through Ripple. We announced it a few weeks ago, but we actually launched it in stealth back in December. Now, when we first were looking at this product and I was bringing it into the bank, the first question that most of the folks in the bank said is that, isn't this going to wipe out our remittance revenue? And I said, it doesn't matter if it reduces our remittance revenue if our remittance costs fall faster. So on a margin basis, we come out ahead. But if it reduces costs and revenues to the point where we can now offer remittance services to people that couldn't previously afford to do international transfers, we're basically increasing the volume and the velocity of transactions. If you can send money internationally for a fraction of a baht, for just a few satang, and you could do it instantaneously, there is no reason why you wouldn't just transfer money constantly. Instead of saying, okay, I'm going to do my regular monthly transfer. My kid's tuition is coming up in the US. I need to wire money in one go so he can pay his college tuition. It's probably going to cost me $300 to wire 10,000 or whatever the case is. If you drive down costs to almost zero, then you just send money to your kid in the US anytime you want. He's $20 short, send him money. You go out to dinner with your friends, you just wire, here's a few cents. So when you think about disruption, you have to go at kind of at the service level and at the process level, and you have to think about the costs and as well as the revenue. So when I think about disruption in financial services, the one thing I wholeheartedly agree, I strongly believe, is that the idea of assets driving bank revenue going forward is dead. So the idea that banks are going to be deriving revenue from fees and interest, that's gone. 10 years from now, all those fees go down to zero. So banks in the future, if they're going to survive, are not going to be stewards of people's wealth. They're going to be stewards of people's data, which means banks need to figure out if we are their bank of data, we need to find better ways to collect data, to store data, to secure data, and to monetize data, which is easier said than done, and that's the great challenge. The one thing we can say for certain is, the money that we make on remittances, the money that we make on, insurance premiums, all of these types of traditional revenue sources, they will get disrupted. Banks won't disappear. They'll find a way. Banks are full of really, really smart people who are desperate to find a way to keep employed. And so, we're going to find a way. And if we don't find a way, then the kids that we send to school, we're going to tell them, learn how to program computers, and you just, you sustain my retirement. But, I think banks will find a role in this new world. But it's hard to say what the role of a bank is going to look like specifically.
Okay, I think that's comfort the audience a little bit, especially the portfolio manager in banking vertical. So, Kun Tanyapong, ASEAN Money already expanded in six countries in this region already. I would like to know how your experience dealing with regulators from other countries comparing to Thailand. Because yesterday I heard the speaker from U.S. Embassy talking about some regulations that are outdated about the banking license, that maybe they looked at the mobile banking as a branch for foreign banks. How is your experience dealing with the regulators?
Yeah. I wouldn't want to compare regulator of different countries, but generally regulation is very important in the fintech area. Fintech, the name says, fin is financial. So with financial, generally regulators, will closely watch and has a strong influence in what can be and what cannot be done. I think under regulation, I want to probably break it down into two key areas. One is the regulator perceptions towards innovations, toward new idea. And the second is about the policy, how the policy that have in place or the policy that is going to be developed impact the growth, the adoption of fintech. If you look at different countries in the region, and again, it's very much go together with the development of each particular country. I just came back from Kuala Lumpur last week and have a chance to discuss with the regulator of Bank Negara of Malaysia. I think I'm very impressed with the level of knowledge, with the openness of regulator, also with the progressive thinking of the Bank Negara in Malaysia in supporting the fintech. So and if you go down to slightly less developed countries, I think some countries are still, regulators are not very open to innovation yet, and there's some countries I don't want to name. Some countries, for example, it's only allowed. For example, it's only allowed banks to do fund in to the wallet or to the bank account, right? And with that strict regulation, it makes it very difficult for fintech to compete in that market. Because if you don't allow other people to fund into the wallet, then how can a fintech and e-wallet company compete or help drive customer behavior in converting from cash to digital? In Thailand, we can do fund in at 7-Eleven. We can do fund in at banks. But in some countries, we cannot even allow to do that. So regulation-wise, it has a major impact in terms of how fast can the fintech grow in different space. In Thailand, in general, I'm seeing a willingness of the regulator, to engage fintech. I think central bank now are setting up the fintech department, only accept application related to fintech only, and the person who are working on that fintech, they focus purely on the fintech, trying to understand what are the technology difference, the new technology that are impacting the financial services. In Thailand, there's also new law that are being drafted. Is a law that allow some of the financial services company access some of information that is not available today. But that information has to be sanitized out of the personal information. But that information will be, if fintech company or banks can access those kind of information, it will be easier for banks or fintech company to offer product and services to customers. I mentioned earlier about the SME. At least 2 billion SME in Thailand don't have access to loan. From financial institution today. That's because the lack of information that financial institution is having today. I think with the new policy of fintech company or banks that can access some information that which otherwise in the past will not be able to access, things like payment behavior apart outside of the credit bureau. Some of the tax information that can be available, even things like eKYC. A lot of times in Thailand now, people have to, when you want to open a bank account, you have to go to bank branch. You have to show your ID to the teller in order to open a bank account. But in fact, the technology now allow you to do online as secure, even more secure than people go to the branch. The government has the high resolution picture of everyone of us in the ID. We also have it in the passport. That's a high resolution pictures. And there's now technology where it can scan your face, it can scan the blood vessel around your eye and compare with the high resolution picture that the government has. And it can compare if that person are the same person, if both is the same person. And with the same persons, then you can onboard that person online. So there's a lot of things that need to be done. I'm seeing the regulators in different countries are more engaging, are more active in trying to accommodate. There's a concept called sandbox that recently implemented for central bank. Whereas technology changes very fast and change every day. So regulator cannot keep up with the changing technology. So what regulators have come up, they call it sandbox. So they said, okay, if you have a new idea, it hasn't been proven, put this in sandbox. Test it on a small scale and see whether it works, see whether it help drive customer engagement, help change customer behavior, whether it's have any risk toward the customers or public at large. So with that sandbox, it help accelerate the growth of the new technology in the financial service sector. So I don't know if that answers the question.
Yes. Paul, so I know that you have been to Scandinavian countries recently, and I heard that Scandinavian, especially Sweden, is very advanced on the banking business, and the regulators are very change the mindset to embrace the new technology. Do you have any idea how we catching up or on the right track on the regulation side?
Well, I've probably been, my team and I have probably been all over Europe actually. So we've done many trips to London, We've been to Italy, France, Spain, Portugal, Germany, the Nordics. I think that, I think Europe is fast becoming, as a bloc, one of the most advanced fintech regions in the world. Short of China. China's in a bit of a league of its own. What's kind of interesting is if you look at the EU as a bloc, and if you look at ASEAN as a bloc, ASEAN has 2x the population. We have about 660 million people across the 10 countries versus about 350 for the EU. Obviously, their economies are more mature, but a lot of the technology indicators in Asia are quite impressive in terms of mobile phone penetration, smartphone penetration, social media usage, willingness to make purchases over mobile. But I think what's largely holding us back as a region is that, I think to Ascen's experience, they're experiencing, 6 different regulatory approaches and regimes in 6 different countries, whereas the EU tends to be a lot more uniform. So right now, the big thing on everyone's mind in EU is PSD2, the Payment Service Directive 2, which is sort of the next generation service directive. And these are service directives that are designed to create standards across financial services, across the entire geography, which makes it easier for any fintech to come into the region and say, if we can plug into any given bank in any given region, it's going to be very easy to plug into a different bank in a different country because the standards are there. It also means that, if I am a French person needing to send money to someone in the UK or sending to someone in Italy, it is going to be like sending money to someone who's in the next neighborhood. They are literally creating one financial market without borders, without geographic or political borders. So I think that's a big thing. I think to your question on Scandinavia, I think, if you look at probably some of the most, relatively cashless societies on Earth, we do spend a lot of time thinking about China because it's 1.3 billion people and they're big. But if you look at who's probably the furthest along in extracting cash out of society, it's countries like Denmark, it's countries like Belgium, it's countries like Sweden, which is quite amazing. My team and I spent 3-4 days in Sweden. It is almost impossible to use cash in Stockholm. Merchants don't take cash. Everything is electronic. I couldn't even get a bus ticket with cash. We talk to the merchants, they say only the tourists use cash. And the only place you can use cash are probably in the tourist-heavy areas. But, to their credit, the infrastructure is phenomenal. I had to take the bus in Stockholm, and I'm looking at the bus schedule, and there's a sign that says, cannot purchase tickets on the bus. You have to purchase through an app. I looked at the schedule. I had 4 minutes before the bus arrived. So I downloaded the app, super high-speed internet, simple punch-in of my credit card number, super quick authorization. I bought my ticket, and the bus arrived 2 minutes later. So I did it all in about 2 minutes. I basically brought about $1,000 worth of kroner, and I basically came back with about 950 of it. You can't get rid of it. It's amazing. We talked to Swedbank, one of the largest banks in Sweden, which doesn't say much because Sweden's a small country. They have 300 bank branches around the country. Only 3 handle cash. And the reason why is because Swedes do not visit bank branches anymore. The average Swede visits their bank branch less than once a year. But they use their app at least 500 times a year, meaning they're basically going through their app almost twice a day. And I look at my iPhone, 99% of the apps I don't open up more than twice a day. You know, it's either Facebook, Line, or a game, and that's it. So, you know, it's amazing. And the thing is, and the key message of that is, you know, Sweden is a phenomenal collaboration between banks. The banks are very progressive. The courts, the government, the regulators, all the constituent parties are on the same page. They don't always, they're not always in sync, but they're largely moving in the same direction. And I think what's quite amazing is that a lot of the financial innovations in Stockholm were driven by coalitions of the banks. They weren't waiting for the regulator or the government to tell them what to do. They got together as a group, and it's very hard for regulators or courts to say no if the majority of the country's banking power says, we've thought through the problems, we've created a solution that we think are good for customers, and you know, we want you to adopt it.
Okay, I would like to open the floor for the question. We have like maybe 1 or 2 questions left. I'm really looking forward to see like banking coalition in Thailand, like many constituents, and I hope to see Ascent Money like doing all the bus ticket next, maybe this year or next year. Are we having a question from the audience? Come on, I know you have like want to know a lot about ICO, a lot about blockchain.
It's like crickets out there.
Or I will let the panelists asking you. So if there is no question, I would like for you to maybe like summarize or give the key takeaway from this session for the audience before we stay hungry and maybe not foolish anymore and go to lunch. Maybe starting with Kun Tanyapong.
Thank you for having me here. It's you know, great honor to speak to all of you here today. I think fintech industry is just recently started, and in Thailand and Southeast Asia, I think it's you know, people are starting about fintech probably less than 2 years ago. I mean the mass population, and a lot of people don't know the fintech yet. So that's a long way to go from here. But I think fintech will be here to stay. It could be, depending on which form, it could emerge. And what we have seen is, I think unlike brick and mortar traditional business model where you can have many that coexist together, you could be 20, 40, 100. But Jenny in an online world. So there will be only a few who emerge as a winner. So everyone is working you know, very hard in trying to win that space. With that, they still need you know, a lot of changes. We talk about regulation. You know, I think Paul made you know, a very good point, a very good illustration. In terms of you know, how regulators in more developed countries are doing. I think we need more support from the regulation side in order to speed up the development of fintech in Thailand and in the region. And also, I mean, it's a scale. Scale is important. If we have to go to different countries and doing just different things in different countries, it's actually slow us down significantly. Different regulation requires different setting, different go-to-market, different type of investment. And it's very difficult for us to get to scale. So there's still many challenges that we are seeing ahead. Though we see many opportunities as well. We see that there's a lot of underserved population in this part of the world. Even the market like Thailand, there are only a small percentage of people who do investment on a regular basis, apart from LTF and IMF. So that's still a big opportunity that we are seeing, and I think collaboration with bank, collaboration with other parties will be important, for the success of fintech.
Okay, Paul.
All right, I'll keep quick because I know that the lunch buffet is just sitting out there. So I'll probably gear my summary towards the audience because I know many of you represent companies that are long in the banking industry here in Thailand. So there's probably a little bit of nervousness about whether your investments will still yield a return. So the thing is, even if the Thai startup ecosystem is playing catch up, and fintech is now just sort of on the mind of our country. I would say the banks here are moving aggressively into the space. No one has figured out the right formula. No one's figured out the right way to work with startups, but banks are engaging. 4 banks have formed CVC funds, which is unheard of in any country in the world. I don't know of any country where banks that represent half of the assets under management have formed VC funds to engage with financial technology. That's quite amazing. They're starting startup accelerators. They're doing partnerships. I know that fintech is what keeps a number of CEOs up at night, and that is a very good sign because the ones that don't think that financial disruption is going to hit their business are the ones that will get disrupted. Going back to Andy Grove, founder of Intel, only the paranoid survive. So I joined SEB because I know my CEO is scared out of his mind out of technology, and he's willing to throw resources and people and capital behind getting on top of this trend. And our bank is not alone. So I think the banking industry in Thailand is in good shape.
Thank you very much, Khun Paul and Khun Tanyapong. Please give her our applause.
Thank you all panelists and also Khun Nattanuch for the informative session.